Hi, good evening, everyone. Very good evening to our members of the CFA Society of Malaysia, friends of the CFA Society of Malaysia, our candidates, the volunteers, even our upcoming youth ambassadors from the universities, and of course, not to mention our employer partners, what the premium and recognized, right? So, welcome to the part 3 of this series, right, where we will talk about cryptocurrencies. So let me bring up my screen. And here we go. Let me make sure I can see the rest of the chat. Right. So before we begin, I think you have seen that there's a link sent out via the chat. If you have questions, please feel free to put that into the meeting pulse. We do have a Q&A session at the end of it, right? So to start off, a quick introduction. So my name is Jin Yong. I'm the treasurer and also one of the directors with the CFA Society of Malaysia, right? And this is part 3. So of course, part 1 and part 2, part 1 we did digital banking. Part 2 we look at active versus passive investments. And if you miss those, you can always go to our channel on YouTube to actually view it from the recording. So today we'll be looking at crypto or blockchain. And so yeah, we took the slide that you see on screen from FinTech News, courtesy of FinTech News. And when we first started to look at this, it was a very small picture with a few logos. Now you have trouble trying to find a particular company inside. There's so many in there right now, right? So I want to start off by just giving a quick recap about the digital adoption in the capital markets. So this is taken from SC. Now, if you look at on the right-hand side, the growth in the new accounts, trading accounts. So this is not crypto, but just purely trading accounts on the stock market. 249% last year, 2020, right, via online-only broker, right? So of course, the pandemic has accelerated the adoption of digital medium, digital channels. In the middle, you have 175,000 new digital investment management accounts open, right? You might have heard a different name. It's called robo-advisors. So this was the topic last week, right? And finally, 450,000 new digital asset exchanges accounts were opened to date, right? Or rather up to the end of 2020. And we are very, very fortunate and very grateful that we actually have all 3 of the digital asset exchanges registered in Malaysia as our panelists here today. In case you're wondering, what are digital asset exchanges? I think they are known as crypto exchanges. It's just that in Malaysia, officially, they're all called digital asset exchanges, at least from SC's perspective, right? So enough about me talking. So first up, I would like to introduce Aaron Tang, who's the country manager for Luno in Malaysia. Aaron.
Hi everyone. Thanks for having me. So a really quick introduction on Luno. Luno, we want to make it safe and easy to buy, sell, store, and learn about cryptocurrencies like Bitcoin and Ethereum. We are the first digital asset exchange in Malaysia, regulated by the SC since 2019. So we've been around for quite a while and really happy to be here. Thank you for inviting us and looking forward to a good discussion.
Thanks, Aaron. Next up, we have Synergy, and joining us here is Edgar Joby Gasper.
Hey,
Joby.
Hey, everybody. Thanks for having us over. My name is Joby. I'm part of the Synergy, right? One of the 3 regulated exchanges in Malaysia as well. We started back in 2017 when our MD and founder, Kelvin Chua, who was traditionally from the trading world as well, saw that cryptocurrencies were going to be an interesting new asset class that was 24/7 and what it implied. So he pulled a team together, and we actually formed in 2017 in Bangkok Lane, Penang, behind the very famous mee goreng sotong over there. So for those of you who used to come to Penang to eat the food, we were right there. We could smell it every day. We started as one of the reporting entities to Bank Negara Malaysia, and then later on we submitted and were successful, as with our friends in the space, Luno and Tokenize, to get the RMO status for a digital asset exchange. And of course, for us, one of the things that we pride on is our the fact that we are homegrown. Started off in Penang, built in Malaysia. Everything we have is built in-house in Malaysia as well. So yeah, welcome.
Thank you, Joby. Why did you have to bring up Penang food, knowing that we are now in a full lockdown? At least I think that's what full MCO means. Okay, last but not least, we have Hong Chi-Yu, who is the CEO and also founder of Tokenized Exchange. Chi-Yu.
Hi, thanks, Jin-Yong. Yeah, hi everyone. So I'm Chi-Yu, the founder, also the CEO of Tokenized Exchange. We started way back in Singapore, also almost same time like Synergy, late 2017. But just shortly, 3 to 6 months, we enter Malaysia market, and we start operating in Malaysia market in 2018. Almost the same journey, like our other two peers. We get pre-approval in 2019, June, one of the 3 license exchange. And we went live last year, April. So we have just went live more than a year. Yeah. So yeah, hand over back to you, Jin-Yong.
Thank you, Chi-Yu, and thank you, Eric, and also Joby. So our topic today, right? We're going to talk about cryptocurrency. The title says point of inflection. Right? So this segment has been in the news quite a lot. There's been a lot of ups and downs, right? But given that we are the CFA Society of Malaysia, right, and cryptocurrencies by extension, right, it's known now as new emerging alternative asset classes, right? So what we're going to find out from the folks here, you would hear their views on what does it take for this asset class to actually move into mainstream. Now, of course, just one thing to remind everyone is that even though each of our guests here are here in their official capacity representing their respective organizations, all the views that they may share later on, I would say, are most likely their personal views and do not reflect the official stance of their organization, right? Just to put that up front. So let's dive right into our panel discussion, right? And I'd like to start off first because I thought started by saying, how do we actually get this asset class to be adopted more widely into the mainstream, right? So this is my indicator, right? So I put it out here first so that nobody else can claim it. This is my indicator of asset class maturity. When do we think that an asset class is now adopted widely, right? You probably can recognize what I've just shown on screen, right? So yes, you can always burn money, even LV bags, or even a whole bank, electrical goods or car for your ancestors. Now, if you ask me, what is the best indicator of a mainstream adoption of cryptocurrency? This would be it. The day when you can actually buy or burn Bitcoin or any of the cryptocurrency for your ancestors, right? So that will be the day that the crypto space has truly arrived, right? Now, jokes aside, right? Let me take you back about a decade earlier, right? So in the early days, Bitcoin was actually made famous, or rather, I would say, made infamous because it was the currency of choice used in this website called the Silk Road, right? So what do they sell? If you look at the first category up there, it's drugs, right? Hence, that's why right from the get-go, it had a very negative reputation associated with cryptocurrencies. They're saying that, oh, it's for the underground world, it's for all the dodgy people, dodgy activities. You can buy drugs, you can buy guns through this online website, and you pay for it using Bitcoin, right? Well, of course, this has been shut down. FBI has raided them, and apparently FBI have raided and took over $1 billion worth of Bitcoin. So fast forward to today, and what do we have? Yes, that's a pancake, that's sushi, and that is my toilet sparkle from My Little Pony. For those of you who have daughters, you will know who I'm talking about. There's, of course, that dog and Farmville. What exactly am I referring to? So if you have been following this space, you probably have seen some of these names or terms: the Dogecoin, Pancake Swap, Sushi Shop, Uniswap. This is from the DeFi space, and even yield farming. So it's quite a big turnaround from buying guns and drugs, and then suddenly it's now all very comical and food related, right? So the first thing we would like to talk about is the crypto space, right? For it to be adopted by the masses, by the mainstream, right? What really is the problem? Is it technical or is it reputational, right? Because what I just showed just now was more on reputation, right? So first up, I'd like to get Joby to give his views.
Sorry, I was on mute. Sure, thanks. And Jinyo, I love the maturity index that you use. I think I might steal that. Right there is probably an IO or a new project, a new coin project in the works. All right, so yeah, when you mentioned technical or reputational for the crypto space, one thing you have to realize that there's two cases to be made, right? One is the technical challenges is solving a reputational problem when you're talking about specific projects. But if you're talking about the image of the crypto space as a whole, then yeah, it has a little bit more to consider, because it is no longer a technical issue. It is more a perception issue, and that's uh, education is going to play a very big part in this, because right now the market that you see today is people coming in because of all the memes and all the tweets from certain famous people, and they're coming in and they're asking questions like, when do I buy and sell cryptocurrencies, as opposed to how does it work or why does it matter, right? And as long as such a market exists where more people are asking the questions of how do I make money, or how do I basically gamble into the space, versus really asking the real fundamental questions, then there's going to be a lot of other people in the space trying to take advantage of those people. So you have scammers and things like that. And of course, whenever scams hit, they tend to make much better headlines and are less boring than technical issues, right? So I would say that where crypto is at the moment, when talking about the space as a whole, is that we need to close that educational gap, right? The reputational problem spawns from the fact that a lot of people in this space are not familiar enough with how or even why cryptocurrencies exist, and they're coming in and they're feeding the scammers, who are then giving it's a really bad cycle where the reputation just keeps getting worse. And if we can tip that scale to get people to consider more on the how and why that this space exists, then I think this problem will go away. So yeah, definitely a reputational concern as well. Yeah.
So it looks like you're saying that probably education would be one way to actually improve the perception of this space. Education for
It would be definitely on education, because the other side of the question is it a technical challenge? And to be honest, the technical side is not really a problem anymore. There really isn't a technical problem when it comes to the crypto space, depending on the projects that you're looking at, right? Each project has a technical solution trying to solve a problem that they are trying to fix. But now the key challenge is getting people educated about why these different projects exist, right? It's not all about Moon and Doge.
Okay, since you mentioned that the technical problems are solved, okay, this question I'll pose to everyone here, right? The other reputational problem that the crypto space have is the fact that, mining activities uses a lot of electricity, right? So that also creates a reputational problem from sustainable perspective, right? So how is that being addressed from a technical perspective? I mean, anyone is free to answer.
If you don't mind, I do have something to add on that. I guess, solved is not the right word, but there is a lot of solutions in place, right? So if you're talking, for example, on the environmental side of things, you're looking at, I would arguably say, if we look at the media, then the cost of running the Bitcoin network right now is more expensive than certain countries and things like that. It does generate concern, right? So on that note, you also have other algorithms that are being experimented on. You have the proof of work networks algorithms that are consensus algorithms that do cost a lot. But when you do compare them to what they do on a global scale, like you might ask the counter question of how much does it cost to run a banking network, right? There's also a value that needs to be applied to that on a global scale that you need to do an apple-to-apple comparison on. So there's a lot of back and forth about whether Bitcoin does it better or worse. But the point here is that in the same crypto space, you also have other algorithms that are coming into the discussion. This year in particular, you've got a lot of cryptos talking about proof of stake, where it is, a fraction of the cost to achieve a similar function, right? The consensus algorithm to solve something like Bitcoin, where you're able to transact value over the internet. So which solution comes out in this space at the end, we will have to let the markets decide, but there definitely are solutions in place to either bring down the cost or validate the current price we're paying to run the network on things like Bitcoin as well.
Okay. Aaron, do you have anything to add to that? Never mind. I think somebody... Oh yeah, sorry, Aaron, go ahead.
I think we were both waiting for each other. So
no, I think Aaron, you go first. Pretty much for me, I think Edgar has covered most of it. But yeah, Aaron.
Okay, cool. So I think if we talk about Bitcoin specifically, Bitcoin's environmental issue, I'm not saying it's not a concern, but I think it is more a reputational issue than a technical issue. And the reason why I say that is if you put it into perspective, and I like to look at some of the tweets that are going out around this thing. Bitcoin uses a lot of electricity. Definitely that's true. But Bitcoin uses 6 times less electricity than YouTube. So, then the question is like, is a global decentralized payment network more valuable to humanity than watching videos of cats online, right? That's a question that people start to question. And then you can say that Bitcoin uses less energy than all the clothes dryers in the world, right? In fact, the country of US alone, the clothes dryers in the US alone, the estimated electricity usage is roughly the same as Bitcoin, and that's just one country. So the argument may be made that, why don't everyone just line dry their clothes instead of chucking it into the dryer to save energy, right? So I think while I do acknowledge that Bitcoin uses a lot of electricity, I think it has to some extent been maybe sensationalized or overblown. And I think the key consideration here is whether it brings value to people or not. And I think a lot of people still think that Bitcoin has no value to humanity. That's why it's completely a waste of energy versus, say, something like YouTube where I can watch guitar solos or something like that. So I think that's the first thing about its reputational problem. I feel that the nature of Bitcoin miners themselves offers a solution because Bitcoin miners tend to go towards where the energy is cheap and sustainable. So it is not in their interest to go and use the most polluting energy sources or to use the most destructive energy sources. Rather, they are able to go and figure out good energy sources, cheap energy sources to mine Bitcoin for profits. Simple example, I spent actually most of my career before crypto in the oil and gas industry. And if you think of all the images of oil and gas industry, the platforms offshore, you can always see that most of them have this burning little thing, flare. That is actually people burning off excess gas. Yeah. So the question is, why don't people use that gas for something productive? And the truth is, it's not economically viable in most cases. But Bitcoin miners today are starting to think, hey, why don't I just use that excess gas? That would be wasted anyway to mine Bitcoin. And I feel that as we get more creative in these kind of things, we can perhaps go and address these environmental concerns better. Sorry, that took very long.
Yeah, I really
awesome sharing.
Yeah, Gio, if you don't mind,
go ahead, please.
I think Aaron's answer also inspired me to just want to comment a bit. On my opinion, a bit extra additional opinion is that nowadays I think the source of energy, we have solar energy, and the technology is getting matured. I just want to quote, the Katie Wood, I think also highlighted that on the grid energy, that how to leverage on the solar energy while power on certain things, and how to channel some, to mine Bitcoin, right? So I think we are in an era that we have more solution right now compared to the past decade. And, the environmental issue, just like what Aaron tried to highlight, I think it's overemphasis and become more sensational rather than fact-finding. Yeah, I just want to highlight that, right? Yeah.
Okay, great. And I hear the word sensational mentioned a few times, so I thought maybe the next slide would actually be good, right? So instead of Mr. Elon Musk, right, why don't we have a new spokesperson for the crypto world? Actually, I just took this from CoinDesk today, right? I have not actually started to read what is Ethereum Max, but hey, it's Kim Kardashian, right? So that should go a long way towards helping the reputation. All right, now let's bring it back to the theme here today, because we want to talk about adoption, right? So in the traditional finance space, we have things like efficient frontier, the Black-Scholes equation, right? Don't worry, I'm not going to give a lecture on that. I'll fall asleep myself. We have infrastructure such as the trustees, credit rating agencies, right? So there's all this infrastructure to support the entire industry. Now the question is, what does the crypto ecosystem have, right? Is the crypto ready for institutional investors? Because it's one thing to be able to cater to the retail investors. It's a totally different ball game when it comes to the institutional investors. So for this particular team, I'd like to get Aaron to start it off.
Thanks, Jing Yong. So I just want to start off by saying that my observation, at least, is that institutional interest has continued to grow and is growing rapidly, especially over this past last few months. I'm going to plug some statistics that I looked up. So Grayscale is the largest provider of digital asset trust funds in the world. Over the past few years, they've already achieved a $24 billion assets under management in just its Bitcoin fund. So for those of you who may not be aware of Grayscale, many companies invest in Grayscale because for whatever reason, their own bylaws or their own, institutional regulations, they are not allowed to buy and hold Bitcoin directly. So they invest in a fund like Grayscale, which is akin to just investing in, say, like a stock market kind of thing. So that's the first thing. Secondly, I looked at a Canadian ETF. This is called the Purpose Bitcoin ETF. It was launched in February 2021. Within 2 days, had grown its asset under management to $400 million. And very recently, I looked up a couple of days ago, they already crossed $700 million. On a personal level, I've also had an uptick in chats and interests from Malaysian companies. We can't share exactly who or when or what, but more and more Malaysian companies are already starting to talk like, how can I get involved in crypto? Can I hold it on my balance sheet? So my observation is that institutional interest is high, and all you guys, please let me know if I'm wrong. The infrastructure today, unfortunately, though, I feel is very, very basic. It is one thing for a retail investor to download a crypto app or a digital wallet and then sign up with their IC, and then they can buy crypto. But for a institution who's used to custody, who's used to clearing houses, things like that, having all the checks and balances in place, I think the infrastructure today is still very basic. What we hope for is that over time, the infrastructure will continue to develop. We've started to see some of the innovations or some of the progressive regulations from the SE. For example, there are some regulations being released for initial exchange offerings. So if you want to raise funds using crypto assets, now you can do it not now, but maybe in 1 year's time when all the licenses are granted. And then we see regulations coming out for digital asset custodians. So like, if you want somebody to hold your digital assets, there is a regulation for that as well. And I think over time, we're going to need more and more of this kind of things before companies will be more comfortable to invest. The third thing I want to bring up is that I think there's a whole reputational thing that's going on. And why I say this is because when we talk to a lot of the institution guys, these guys are investing in crypto on their personal basis. Yeah, I mean, they know Bitcoin, Ethereum, but from an institutional level basis, are they going to like put their name on the line and like go and have 5 discussions with compliance, with the board of directors, and say that, no, we really need to do this. We need to be the first in Malaysia to do this, right? And personal experience, when we were trying to get our own, just a simple bank account, I personally went to like almost all the banks in Malaysia, right? Whatever bank, like you name it, like BSN, Bank Rakyat, Maybank, all like literally all the banks. Even if we got like some guys interested, at some point, maybe they would eventually give up because they say, oh, there's too much internal pressure to not do this right now. So I think there's this whole level of, what do you call that? Maybe inertia, or people are still being conservative. And I do hope that as time goes by and as we continue our educational and engagement efforts, that we will see more partnerships with, people sitting in C-suite level, board of directors level, because otherwise then no one will actually take that first step.
Yeah, I definitely agree with Aaron over there. The growing institutional interest is definitely there, but like he says, right, one big challenge is that you have to present this to your board most of the time. And how on earth do you justify something like that? You might get a very gung-ho young guy in the organization trying to drive it, and then you go up to your board, who are usually elder folk, who look at this and go, isn't Bitcoin that scam that came out in the newspaper? Somebody lost how many million? And then it becomes a very, very, that reputational gap is going to definitely come back and bite us over there. So this is like what was mentioned, right? The IEO regulations, digital asset custodians, these are things that help lend credibility to the space. So it becomes a bit more digestible to the institutional investors as time comes around. And, from there, then they will start to understand more and more into the space. It's not just about buying in and speculating. There are also benefits that can come through adoption of some of these assets. And of course, over time, it's just trying to break into that market right now. The progressive state of the Malaysian regulators does definitely help that along. So yeah, hopefully we see more and more grow up in this space. I think the other challenge that is faced by the institutional investors is going to be understanding the volatility of the space. It is quite nuts, and it's hard to justify really because you might buy in a few $1 million of your holdings into a particular Bitcoin or something, and then one tweet from a billionaire on the other side of the planet, and then the price goes up or the price goes down. And how do you justify something like that? right? So I think many of those that do come in understand that in the long term, a lot of these things iron out. You want to come in understanding what the value is today, what the value proposition can bring the cryptocurrency industry in a few years, how it actually reduces things like the cost of the value supply chain, and why that will bring the whole market up in a few years, so that the roller coaster rises and dips that happen from these media events don't impact the long-term investment strategies of a lot of these players. So yeah, I think those that come in understand the longer game. It's not just about when moon and things like that.
Yeah. If I may, I will just make it short because I think Aaron and Edgar has made a very good point, and I definitely concur with their statements. Right. I think I will just break into two further comments. I think first part is that in terms of is crypto ready for institutional investor. If you talk about US, right, we already see a lot of listed company like MicroStrategy. They take part as a leading company. Then we have also Tesla, which is the main actor of the sensational and very sentiment players currently that they're already adopting, right, and they're already investing in cryptocurrency like Bitcoin. It's just that in Malaysia, I think I also saw some comment at the Zoom chat, is that it's always about accounting treatment, right, that hindrance maybe some of the listed company or some of the company out there to see how they can take the next step in crypto investing and bring the crypto into their balance sheet, right? I think that's is always ongoing challenge, and the fear is real, right? How to do the first leg, right? But I think three company here definitely will be the frontier, right, to see how we can structure certain framework. And as a regulated players, I think we are creating more clarity and also some standard where the market participant in domestic, right, mainly will see how they can start their crypto investing very soon, and there are more guidelines and clarity, no matter on the tax, no matter on accounting treatment, and market clarity and integrity. I think we are coming to a maturity very, very soon. I think this is also thankfully that the regulation of a digital asset kicks in quite early, like in 2019, and we sort of lay a very, very strong foundation right now to enable more and more market participants, especially institutional investor, to come into the game or to come into this arena, asset arena. Yeah.
Thank you, guys. Okay, I want to, because I was taking notes while you were speaking, and I actually just want to make sure I heard it right. Aaron, you mentioned that Grayscale, that one single fund, that's the Bitcoin Trust, right? 24 billion.
Yeah, that's
24.
correct.
Wow, okay.
Yeah.
Even myself, who have been keeping in touch with this space on and off, I'm surprised with this number. Right? So I think that can definitely go a long way towards addressing the reputational perspective, at least for the institutional folks. Right? The other thing that was mentioned, I think quite a number of times when you were sharing, was regulations. Right? So just want to find out how important is regulation in promoting or bringing adoption to another level, at least in Malaysia's perspective?
Yeah, I think regulations are important, but more important is that the regulations themselves must be practical and not overly restrictive. So we have seen, I mean, we have a very good relationship with the SC. We constantly giving feedback together with the other DAXs together. As an industry, we're constantly giving feedback. So far, I think what we have is quite sensible for the retail investor. I think the bigger challenge actually is not so much the regulation, because the regulation is already there, right? I think it is, I don't know if I'm overstepping here, but I think the risk averseness that we see within organizations, or maybe in certain departments of organizations that are not ready to be the first to take the leap and to start being involved in digital assets. Because so many times we can show all the paperwork, documentation, no regulation, but ultimately it becomes a human decision, right? Are your board of directors ready to say, yeah, okay, we're going to take that plunge and we're going to be one of the pioneers? We haven't seen very much of that, to be honest.
Okay, I actually take note of, there were some questions, both from the YouTube and also in the Zoom chat, whereby there were many using Binance. And I think one of the YouTube chat was saying that what's the difference between the local DEX versus, say, Coinbase? So I think my question here is that how would the three locally based DEX differentiate themselves against, because it's the internet, right? So anyone can just log on, create an account anywhere else around the world. How would you differentiate yourself against all the other crypto exchanges that's available from the rest of the world?
Well, I think primary of which would be that Malaysia/Bitcoin pairs are not going to exist anywhere else at the moment, right? We being regulated, I think key here is that being regulated, we do have, especially by the SC, right? Means that we have certain things that need to fall into place in order for us to run the exchanges. For example, things like having custody in a trustee and things like that. So that our customer assets are always safeguarded. We actually do need to meet a lot of these criteria. Whereas if you're not regulated, then you have a free hand, and there's always going to be a bit of that risk. I think on top of that, if you're talking about the institutional path, then of course being regulated by the SC also means it's easier for it to make sense for you to onboard crypto via one of the regulated exchanges, right? But I think key to our role here is that if you are trying to trade crypto and ringgit, then this is also where we exist at the moment. And those pairs don't exist anywhere else at the moment.
Yeah, if I can add to that, there's also the question of support and also, I guess, legal status. So if something goes wrong on, let's say, one of our digital asset exchanges, you literally know where we live, right? You know where the directors stay. Everything is published on the SC's website or SSM website. Investors have this legal recourse, or they can at least speak to the SC, right, if they have any doubts. Whereas, I don't know, if you use an exchange based in, say, a small country far away, and something happens, you might not be able to even get in touch with them, or they might just ignore you. So I think that's an angle to consider as well.
Yeah, I think if I can add on, definitely is on tax, right? I think this year tax is one of the hottest debate, especially come to digital asset, right? I also think that, end of the day, tax, if you see all the leading countries like US, UK, the tax is always ongoing in the discussions, right? And to really safeguard, as an investor and better address that, investing through regulated exchanges definitely give you a more legitimate, channel. And also, like what I would like to leverage on Aaron's statement is that also the trust element and also the secure element, right? Because there is governance that is in place, and then you come to, I don't know whether unregulated platforms, when you access through that channel, when you come to audit in Malaysia, what is the repercussion? Right. But definitely if you invest through regulated exchanges like us, that is much well guarded and more legitimate and avoid you to have a lot of issue in the later stage. I think that's the key highlight.
Thanks. Just now, the other thing that was mentioned by one of you was IEO, or initial exchange offering. When I started following this space, I felt that the Malaysian regulators was actually slower compared to their peers in the rest of the region. I was saying, why are we not in the ICO game? And I think that was in 2017 or 2018, right? And it turns out instead, SC decided to go the IEO route, right? Instead of ICO. I'm just wondering, are you able to elaborate on what's the key difference between ICO versus IEO, and why has SC decided to actually take this approach to use the IEO method for companies to raise funds using crypto assets?
I think, if I may, I would like to, answer this, right, is that I think Malaysia, in fact, before ICO idea is being created, right, Malaysia already full of ICO type of project, right? I mean, as a founder, of a digital asset exchange or cryptocurrency exchange platform, one of the things that really hinders me to go in Bitcoin at the early days, in 2011 or 12, is definitely Malaysia full of a lot of creative businessmen, right? And there's a lot of what we call money game, right? Because I grew up in Penang, right? Which we can get exposed to this kind of projects almost every year, and all type of this kind of project. And I think this is why also when ICO as an evolutions because of Ethereum, smart contract, and so on, there's a rise and there's a fall. It's very hard, for the project without some of the check and balances of a platform. For example, IEO as an initial, inspired by initial exchange offering, which you have a launch pad, have a proper platform that is licensed, that you can issue a token. Without that kind of governance and check and balances, right? Unfortunately, you can see 99% of the project out there is facing failure, right? I think that's is inspiration also for the regulators to structure in this way, why they're going for IEO way, instead of the enable project itself to able to launch their own coin and go to the ICO path. I think that this is the main contributions, right? Another thing is also the IEO structures is if another jargon in the industry is STO, has been long articulate, since even 2017, 2018, the previous bull run. But there is for project issuance, there is a structure there, even in US, but there is no secondary market that able to support it. And I'm very, very excited is that, currently we have a license exchange, right? And our license exchange framework is because in Malaysia, all the digital asset is considered security format. So we are able to support, that kind of verticals. And with the right IEO structure that they put in place, right, we can see there's a secondary market liquidities will be for, start with 3 of our exchange, right? All the Dexter's exchange. So it's very hopeful to see how this IEO will go next, right? Yeah, that's my perspective. Yeah.
Aaron or Joby, do you have anything to add?
Well, nothing specific, but yeah, Chiyu definitely covered that really well. But yeah, so it is true, right? The IEO approach is definitely something that's favorable. I'm not sure what you meant earlier by they weren't going to be, or you didn't see them as being issued coming to Malaysia so soon. Is that what you mean, Jun Yong? You didn't expect that?
Yes, because initially, while the rest of the region was doing ICOs, was coming up with frameworks for ICO, SC was still haven't released at that time. Haven't released the IEO guidelines yet, right? So, but now on hindsight, so that was the reason why they took a wait and see approach. And I think, at least in my personal opinion, it was the right approach, given all the money game and like what Chiyu pointed out, Penang being the capital of money game, right? I hope I'm not offending any Penang folks here.
No offense taken. We are fully aware of that stigma.
Okay, speaking of that, I've noticed quite a number of questions asking about alternate coins, whether they will be introduced in Malaysia, because right now, at least in Malaysia, there are only 5, at least for the 3 DEX here, there are only 5 cryptos, what's that, Bitcoin, Litecoin, Ether, Ripple, and what was the other one? I think Bitcoin Cash.
Yep.
Will there be other additional coins to be introduced? Is there any restrictions from a regulatory perspective, and would that be a headwind to growth?
Every coin that we want to list needs to be reviewed and approved by the SC. So definitely, I will suspect that we are never going to see like a very meme-ish like Shiba Inu coin or something come to our shores, because the SC themselves, their ultimate interest is to protect retail investors. So although, you know, I mean, technically you can go to an offshore exchange somewhere and buy as many casino tokens as you want, but that's kind of being warned already as do it in your own risk. So I think where the SC is coming from is the coins that they want to see traded locally are the reputable ones, the one with track record. And for brand new coins, then you have the IEO framework, which is what has been discussed.
Mm-hmm. Yeah, agreed. I think any coins that are going to be submitted right now, they definitely will need to review them one by one. I think at the same time, you know, they are also identifying what are the key parameters of each coin that needs to be acknowledged. So I think as time goes on, we should actually see more and more cryptos ramp up into the space. It's not a promise, but you know, that's the hope at this point, right? So yeah, there's very good possibilities that those coins that was mentioned in the chat might see some time of day where you'll see a pair here, but you know, fingers crossed.
I think, you know, even reputable exchange like Coinbase has also support Dogecoin, right? And I'm quite surprised that I think today they just you know, decided to list Shiba Inu token also, which really, you know, a bit surprised me, right? I mean, but I mean personally, I definitely, you know, quite interested to find out whether Malaysia, you know, what is Malaysia's stance, regular stance on this, and whether we can push this. I think it would be very interesting to see Dogecoin pairing with Ringgit. But I think at this year, I mean, if you're looking at this year, I don't think it's possible. And just to sidetrack, Thailand just announced also a news release that, you know, their regulators don't allow their licensed exchange to list meme coins like Dogecoins or even you know, all the meme coins. So it's getting interesting to see where this goes, right? But I mean, as an investor and also you know, crypto investor myself, I definitely hope Malaysia's investors able to access Dogecoins in the domestic rather than they have to go to offshore or unregulated exchanges to invest. I think we, as a Malaysian, definitely have a maturity to choose what coins we want to invest, right? And giving accessibility is definitely, you know, operators have to push that first, right? But definitely regulators need to be comfortable with that, yeah.
In fact, one of the questions was asking, will NFTs, something which we'll discuss in the next team, will it get listed in any of your exchanges? Is that even possible? I guess the answer is no in the immediate term. I mean, correct me if I'm wrong.
It's actually, you know, NFT, I think, you know, since we are here with my two peers, right, I don't even know whether NFT is considered as a crypto and as a security format. Should we label that this way, or, you know, they are just a collectibles, right? So yeah, on this, you know, I have to discuss with Aaron and Ega what will be their perspective, right? But if it's for
yeah, no, but an NFT marketplace is most likely going to have some form of centralization outside of our own exchanges, because yeah, I mean, how do you think about listing individual? You can't really build a marketplace for a pair of one token, right? So, you know, it's most likely going to be something like OpenSea or something like that. Whether something like that gets the permission to exist in Malaysia, I don't see that so soon. But, you know, who knows? But not on a traditional order book pair for something like NFTs at the moment.
I was just scrolling through back some of the questions, and I just did recall, probably it was you mentioned about one of the restrictions of companies putting crypto on their balance sheet. right? And of course, you've mentioned about getting the board of directors approval and all that. Well, this being a CFA Society Malaysia event, we are, after all, a group of financial analysts, right? One thing that we always want to talk about is valuation, right? So, whenever we look at the crypto space, there's always all these huge, large numbers being mentioned, billions of calculation. Okay, billions is a small number nowadays. They are quoting this, Terra hash, the hash rate per second. I don't even know Terra has how many zeros behind it. But then, what's the value of all these big numbers, right? How do you value something that is totally intangible, right? And not only intangible, but there is no central authority, right? A common question I always get asked when I talk to people about Bitcoin and crypto is that, oh, which company is behind it? So I said, no, there's no company. So if there's no company, how do you value that thing, right? Chiyu, would you like to share some thoughts on this?
Yeah, I think that's what I, one of the top 3 questions I always get when I, founded cryptocurrency exchange, and people always ask me when it comes to, looking at asset like Bitcoin and why they should invest in this kind of cryptocurrency, right? And I always use relative valuations, to talk about upside and potential. But I just want to take a step back before I went there. I mean, I go there is that, even if we look at precious metal like gold, silver, they are literally commodities, and there are no company behind it, right? And you can see their market cap, especially gold, is so huge, right? There's one point of time I look at the market cap, we are looking at 7 trillion, and now we are looking at more than 9 trillion kind of market cap, right? So if you compare that, if you look at Bitcoin, cryptocurrency or digital asset like Bitcoin as a form of storage of value, I think it's a very comparative and relative that you can relate to gold. And I think Bitcoin has a lot of plus point because the nature itself is digital, and the nature itself, because of immutable and how the distributed ledger or blockchain work as an underlying technology, it gives a lot of transparency and also scarcity, much more scarcity compared to precious metal like gold, right? So I think that's the plus point. And looking at previously, when I always articulate using relative valuations methodology compared to the gold market cap, that time I think Bitcoin is only looking at 200 billion, right? Now it has surged a lot, right? With a recent rally, and it is getting inches closer to the gold market cap. But we are still looking at a huge distance, right, on the upside if we compare with asset like gold. So I think this is one of the anchor, I will always look at the market cap to value, digital asset like Bitcoin and Ethereum, where they are at the early stage. So there's one point when we compare to the commodities like gold or silver. But if you take another perspective to look at it, right, is that, Bitcoin and Ethereum as essential is how to say, it's like a tech company, right? Although the concept, is that they don't have any people running, as a management, they are not listed company, but essentially, there's the same audience, just like Facebook, right? Where Facebook, I think, when we see their models, it's about audience and traffic that give the company value. At the early stage, it's always funded by investor money. They don't generate any revenue, right? And you can see how those companies that people, think it's a bubble after the tech bubble, 2002, 2003, and after that we see 08, 09, how they have rise, right, and how their market cap has expanded. So I always like to share this, before Bitcoin, when Bitcoin is only 10,000 last year, is that if you value them at that point of time, they are like, just after that bubble, and their market cap is, at a very early stage, there are a lot of upside. If we just compare apple to apple, how the market cap of Facebook, market cap of Apple, market cap of Microsoft, or even Amazon, right? There is so much upside, right? If the Bitcoin or Ethereum can fulfill their potential. So I think, as an investor, I'm looking at the aspect and looking at the upside, and and we are in a very early stage. Now I think, things are getting more mature. We are looking from the audience that, only 2% out of the whole populations know about cryptocurrency. Now, thanks to Elon Musk, thanks to all the influencers, now Kim Kardashian also come to the picture. We see more millennials coming to the game thanks to Dogecoin. I think we are now looking, maybe, if I may be bold, we are looking at around 40% of the population already know about Bitcoin, right? And the market cap definitely will reflect the fundamental aspect. But this is the fundamental, we are not looking at an accounting statement. We are not looking at the kind of fundamental analysis, right? We are looking at a bit different vertical, just like how Tesla can overvalue, and what are the potentials upside, and how the market cap can reflect to its mean, right? I think I'm looking at that aspect. And before I brought you all, let me maybe listen to Aaron or Edgar to see how they look at this topic, right?
Yeah, I don't mind throwing something in here. So, like what Chiu mentioned, right? A good example is looking at something like gold when you compare it to Bitcoin, because Bitcoin currently in what it's trying to achieve is a store of value, and we won't go through the tech right now, obviously, but if you break it down, the supply versus what it can do and moving of value, the biggest difference between Bitcoin and gold is the fact that one is physical and one is not. It comes with a lot of benefits for not being physical in terms of how do you store it properly, secure it properly, regulate it properly. So it has that. It has the same properties of gold, as in you can. Well, today anyway, you can digitally send people, like if you have gold in digital format, you can send it around. Bitcoin allows you to do that with the actual asset itself. Now, the idea here is that further down the road, it will, if you're looking at the store of value aspect of Bitcoin, then the understanding is that further down the road, if Bitcoin is adopted as one of the forms of store of value, it will have a certain price in the market based on how much volume or what the circulating supply is, and therefore you can speculate how much that market is going to be. So anyone coming into the space today are actually buying in with the understanding that this will eventually fill up to that level. So maybe they'll say, okay, if it achieves maybe 10% of the market cap of gold, then of course it can go to this value with a circulating supply of 22 million. Then I'd expect each Bitcoin to roughly be this much. So compared to today's price, they'd see, it has potential to grow. And then that is talking from the store of value perspective. Now, let's talk a bit more about utility. And this would be easier to see from the projects that use smart contracts. And of course, even Bitcoin is exploring methods to bring programmability into their system. But any coin that uses smart contracts now uses a utility as a underlying value. So let's just take the simple example being Ethereum, right? For all these DeFi projects to run, Ethereum is the gas or the fuel used to run this programming layer that allows the DeFi transactions to happen. And while you don't have a cash flow to speak of, you can actually see the currents of this gas being used on a day-to-day basis based on the volume of transactions. And from that alone, you can extrapolate what the value of the Ethereum tokens can be, whether it's Ethereum, there's going to be many in this space. You have AAVE, Polkadot, Cardano, right? Based on what their use cases in the future is and what the token is going to be used for, you can also extrapolate what the market size is going to be and what the demand is going to be for those tokens to be used in these digital decentralized projects. And therefore, you can get a rough idea of what the price versus the total supply is going to be like. And anyone coming in now is trying to get ahead of that curve, but caveat emptor, right? At the end of the day, if that project fails, then of course, it can also go the other way around. But it's not without a way of understanding what the value can potentially be. As more and more users come in, there's only 22 million Bitcoin. If the store of value narrative holds, then eventually everyone wants to hold some Bitcoin as part of their store of value for hedging in their portfolios. Then there's just a limited supply, and the demand is going to drive the price up. So yeah, it doesn't use your traditional ways of valuation, but it's not without methodology to it.
If I can add to that, I just want to say that over the time I've spent like speaking to people and doing all these talks, I understand that it is quite uncomfortable to try and value something like Bitcoin. For example, there's no discounted cash flows. There's no, you can't sort of use the existing framework and methodology. And the reason for that is because it is a new asset class. Like it's like you can't try and value something like a stock when it's not a stock, or you can't try and value something like say a commodity when it's not 100% a commodity. So Bitcoin is a bit like, they call it the platypus, right? It has multiple characteristics. It's a bit like a precious metal, it's a little bit like a commodity, trades a little bit like a stock. So I think that's why the discomfort comes. But that being said, some of the new approaches to look at how to value, there are lots of papers being written about it. Some of the things people are looking at are, number of active users, how many people are actually using it, which is quite similar to how you would value a tech startup, for example, right? How would you value Uber in its early years? There's like literally burning money, like it's not revenue driven, right? But you look at things like how many people are signing up, how many people are using it. And with cryptocurrencies like Bitcoin, Ethereum, because it is public, you can actually see all this information in the public. How many people are using Bitcoin? How many miners are connected to the Bitcoin network? How many sends are being done on a daily basis? So these are some of the metrics that are being used, which kind of follows Chiyu's earlier point. Some people view it like investing in a tech startup. You look at those kind of early valuations as well. The last thing I want to say is that some of this research is easily available. I'll put a link in the chat. Coindesk.com.research has actually quite some good papers, or these are written like by the people who come up with Bitcoin funds or ETFs. So these are their investment thesis, their methodology on how they are looking to invest and value Bitcoin. And I think that this group would find it very useful. Some of the things we've already mentioned, but obviously I can't explain it very well. But these are proper analysts who are writing the reports.
Great sharing. I was just looking through the Q&A, or rather the meeting pulse, and the top question right now is, what are the aspects or criteria you guys or SC assess before you can list a crypto or digital asset? Now, before you answer that, I would like to also tie that back into IEO, because with IEO coming soon in Malaysia, potentially now companies in Malaysia can raise funds using the IEO framework. But the thing is, each token or each coin or each security potentially can have a different use case or a function, right? So in the traditional IPO, you have the prospectus, and there's a well-defined valuation method that the entire industry is familiar with, right? But with IEO, you can now potentially can have two different coins being issued on the same day, but they have very different functions. So if I was an investor, right, or rather a potential investor looking at future IEO issuance, right, how do I choose? Or maybe take a step back, going back to the question, how would the SC or the future IEO operators assess whether a coin or token gets listed or not?
Yeah, maybe I can try this first.
Yeah, go for it, Chi.
Yeah, thanks. So I think when it comes to IEO, right, actually it's very interesting also. I mean, if you look at two vertical, right, one vertical is that we can see a lot of domestic company, no matter big company or SME, they will be trying to leverage on this new so-called funding channel to issue token. And when they issue the tokens, the dynamic will tie back to their fundamental, be it, they are in the plantation business, they are in property business, they are in certain vertical. There is always a reference point on a listing company and industry peer, then valuations, right? We will benchmark their PE, PS. There's always a benchmarking. But I think the interesting thing is that, let's say if there's Malaysia technopreneurs, right, trying to build a Ethereum killer, right, another blockchain, and I think that is very, very challenging to do valuations, right? But I mean, the interesting thing is that if they are trying to do essentially the same thing but improvised version, there is still a benchmarking, right? So I think this is really circle back to like when Coinbase is going for listing, like Coinbase is like our industry pioneers, and how the whole industry want to value it at. This is always precedence and also opportunity, right? Because it's about how you sell the stories and how the investors subscribe to it. But once there's precedent cases, just like when Grab trying to go for SPAC, and there is always a lot of benchmarking. Like Uber already go listing, right? There's always a benchmarking, and there's a lot of metrics that you can assess companies like Grab already. So I think that's the very, very interesting. I just can give a bit perspective, on which angle to look at, but I also don't have a holy grail kind of answer on that. Yeah, sorry, Edgar. Let me hand over to Edgar.
No worries. Yeah, so I mean, the first part of the question is, what are the aspects, criteria that SC uses to list a crypto? My honest answer is, for the listing of crypto assets, is I don't know, because they definitely have a list of parameters that they follow, which I'm not aware of. But of course, when you're talking about digital assets other than the cryptocurrencies that are listed in the IEO space, then there is guidelines that not we, but IEO operators would need to apply to the issuers of the IEOs that are trying to list their tokens. And of course, based on those guidelines, they will either get approved or not. Of course, I think in the beginning portion of the IEO operators, there's going to be a lot of handheld guidances on how these digital assets are listed. But I think the guidelines are quite specific on what needs to be in place to be listed. So a bit of separation between what the SC lists as a cryptocurrency and what IEO operators will list as a digital asset on the IEO exchanges in the future.
Yeah, so the criteria for cryptocurrency, established cryptocurrencies for trading, that one is actually listed on the SC's website in their regulation itself. Like, they literally say that when you submit an application to the SC, they want to look at whether there has been hacks before on that crypto, who are the development team behind it, some other factors like how long it's been around, what's the history. I cannot remember exhaustively, but it's definitely publicly available on the SC website. In terms of IEO coins, the way I view the SC's regulation is as if the IEO license operators or the IEO operators become sort of the investment banks. Like, they do the preliminary valuation or preliminary examination of the project, and then they sort of become the sponsor to bring it to the SC for the SC's approval. Now, what the SC specifically looks for at that point, we don't know at this point. We can only speculate. But if I had to think of an analogy from the traditional world, the IEO operator becomes like a sponsor to propose the project to the SC.
That's an interesting analogy, viewing the IEO operator as an investment bank. I had a quick look through at the guidelines also. Perhaps you can correct my view, whether it's right or wrong, whereby now the IEO operator in future will probably be a combination of both an investment bank and Bursa itself. They have the dual roles. On one hand, listing, on the other hand, also doing the due diligence, at least on behalf of the potential investors. Is that right?
So I look at it as one more stage. So due diligence, that's the first part. Second part is listing, but it's not listing for secondary trading yet, right? It's listing for fundraising. So it's not like publicly traded on Bursa yet. It becomes more like an ECF kind of situation where I'm listing my project on the platform and people can come and invest. The third portion of it, which is the secondary trading on an exchange, once the coin is available, I view it as a third step. So yeah, it's potentially 3 steps here.
Yeah, just to add on to Aaron, I'm not sure whether we can consider the so-called primary market, right, for IEO, consider as an IPO phase or not. I'm not sure is it relevant, but I think Jin Yong, maybe you can comment better. Will you find a similarity between IEO operators as a IPO, so yeah.
Well, the way I view it, again, using the traditional market as the ICO, you are buying into a Sindirian Berhad. The IEO, you are buying into a Berhad, except that this Berhad, you don't have a secondary market just yet. So that's why I think Aaron's ECF analogy is probably a better fit for that matter. Right now, at this point, I just want to also inform all our audience that because I got several questions, if you miss any part of this program, not to worry, this is recorded. You will be able to view the recording in YouTube at the CFA Society Malaysia channel later. Right, so you just need to search for that. Just to address a few questions that I've got there. Now we are actually we are supposed to be in our Q&A session. Having a look at the second question that is in the top, does CFA have a valuation methodology for digital assets? So I'm not going to put the three of you on the spot, right? But for myself, as far as I know, I do not think so. Although having said that, the topic of blockchain and cryptocurrency, well, any other charter holders, you may correct me. These topics are actually in the CFA syllabus and has been introduced for the last 2 years, well, 1.5, right? So as far as I'm aware, there isn't a valuation methodology for that, right? Now, let me just scroll through the other questions here, right? So there are a couple of questions on decentralized finance or DeFi, right? So one of them mentioned that there are some promising DeFi projects, right? Matic, ADA in the crypto. Will it ever get listed in Malaysia? I think our panelists here have kind of answered that, right? But I think the other question that was asked is, will DeFi become reality, right? What do you all think?
In what sense, reality?
Will we have a world where we do not need banks anymore? I'm aware that there are potential audience here who are working for banks.
Well, the purpose of having DeFi is the decentralization part of it, right? I don't think there'll ever be a point where everybody will want to not have an intermediary hold or manage assets on their behalf. So there are going to be services provided to people that might utilize the DeFi space. But I think where the value of DeFi comes is it is trying to replace certain functions in the current the traditional finance space, but doing it at a cheaper and more effective cost. Because like you have lending, you have borrowing, and things like that in the DeFi world. Many others, but these are the most common. What they're really doing is they're just simplifying it, and because in the world of blockchains, code is law. You can actually preset how you want certain behavior of the contracts to be, so that when it executes, you don't really need costly middleman regulators and things like that. Because usually, if you're gonna run some form of a smart contract that allows lending, it is available for anyone to view how it works beforehand. And that just means that it's not up to any one party to be in charge of it. So anyone that utilizes that would be able to go and verify that it's real and utilize it. That being said, that doesn't stop the existing players like banks to utilize those functions as well, right? They could come in and say that, okay, we can, you can manage this for you on your behalf. They might take a small cut and still be able to operate on the same platforms, or even generate their own versions of the DeFi platforms that people might be more comfortable with. So it's not like a be all and end all, right? It's actually looking to put a more manageable version of what we have in the traditional space, where you have a lot of human intervention in regulation, in managing reports, in approving last week's numbers and things like that before you can use it. In the world of digital assets, or in the blockchain world, since settlements happen instantly, all of this information is flowing at a very efficient rate. So decisions can be made, rates for lending and borrowing can be adjusted on the fly without the need of any third party, any intermediary coming in. So all of these are self-governing procedures that can exist to help the current way that we do things in these spaces. To say that they might replace, I don't think so. It might be just putting more tools in the toolbox for these traditional products that can be used either by banks or by individuals if they want to skip that, right? So not so much a replacement, but it's just changing up the way that we've done it. We've done it very traditionally up to now. There's a lot of friction in the market because, just put it simply, like if I am an intermediary, I need to make sure that whatever comes in and out of my books need to be in good condition. I need to make sure that I meet the criteria of certain regulators. I need to hire people. I need to hire customer support. I need to have a lot of infrastructure in place just to make sure that my operations can run, whether it's the lending, borrowing, insurance, whatever. I need all of this infrastructure, buildings, people, information security, networks, and things like that. Whereas in the world of DeFi, you can do that without these and without the cost of these coming in. And by removing that cost, you're basically removing the friction for doing what the purpose of these instruments are supposed to do without all these overheads. And you can do it securely. So, it's just a better way of doing it. And businesses are going to be built around that in the future. So don't think of it so much as a replacement of the banks, as just an upgrade of the tools that are being used.
Okay, that's good to know, because banks are also my major customer in my line of work. So banks will still be around. I guess you can put it as it will be complementary. Banking will still be here to stay, but DeFi will provide new ways of doing stuff, new ways of running things. Right? Also, I'd like to point out that Aaron has actually put a link in the chat. I totally forgot about this, and I had to take somebody outside the CFA Society Malaysia to actually point that to me. So yes, the CFA Institute Research Foundation actually had published a paper on crypto assets guide for investment professionals, right? So the link is available in the Zoom chat, right? Thank you very much, Aaron. Right. So just again scrolling down the Q&A, there's another one on China. So, and it's not just China, right? So on the one hand, China is cracking down on cryptocurrency while pushing its own digital fiat currency, right? Or some, they call it the CBDC, central bank digital currency, right? So what is stopping other countries from following suit? Will there be other countries who would restrict more and more the crypto activities, and instead the central bank launch their own version? What are your thoughts on this?
Well, you want to go for it, or?
No, Edgar, yeah, please proceed. Yeah,
I guess it's going to run regardless of whether the country cracks down on it or not. A good analogy would be like the internet, right? Which country is in charge of the internet? Which country can shut it down? You can't. You can regulate how it interacts with your economy, right? I can restrict what is coming into my being broadcast through my networks, but of course I cannot stop the internet if whether I'm China or or North Korea or whatever. I can manage what comes in and out, ramps in and out from my ecosystem, but I cannot stop it. And it's the same with cryptocurrencies, right? It's built to be nationless. It's built to be not tied to any one entity, right? So like the internet, you can't turn it off, but if you restrict it from coming or working well in your economy, then obviously countries that do allow it to come in may have an edge over you. So it's more of a, if you restrict it, you're making a decision that it is worthwhile for you to restrict it, because you might, try and introduce some other way of doing things in your country, but you're not following the standard, and you might end up doing more harm than good. But at the end of the day, it's going to have to play out, right? However they wish to try it out. Like in China's case, you mentioned the digital fiat currency, the their version of a central bank digital currency being played out. I think it is interesting to see these CBDCs hit the market. It doesn't change the fact that these are still requiring an on-ramp and off-ramp from the, like take Bitcoin or Ethereum, for example, right? It's still, the CBDCs still need to be existing within those governments' economy. And you are still going to need to ramp in and ramp out of these economies. So the CBDCs doesn't really remove or cause any problem. I think what this is my personal view, is that it allows the traditional fiat currencies to interact better with the digital economy in the future. Not so much as a it's trying to replace Bitcoin, because you can't, because being the nature of being a CBDC means you are going to be tied to some nation state or other, whereas the world of digital Bitcoin or Ethereum or anything else that's decentralized isn't tied to any one particular nation.
Yeah. Okay. So if hopefully we have time. Sorry, I will try to make it quick.
We do. Go ahead. We do.
Yeah. So where I'm coming from is that I think when we talk about China, it's a very good example that we can circle back on the previous question. Sometimes we thought that cryptocurrency or Bitcoin, Ethereum is the one that's going to disrupt bank and make the bank unbank. But I think what China tries to do right here is very interesting, because a lot of our industry peers will always like to say blockchain is decentralized, right? But if you see how China government's using blockchain, they are actually make things more centralized, right? In fact, there is a thesis that actually claim that the China government, they want to decouple the banks. They themselves actually want to take off most of the bank functions and move it to so-called their DCEP or their CBDC, right? So I think China government actually demonstrate a very high altitude kind of these kind of innovations to see how they can prevent capital outflow, right? So I think it's very interesting to see how they are going to do this for the next 5 years. But I think that kind of demonstrations also maybe motivated other central banks to come in to do the similar things. And on a M1, M2, M3, maybe from previously it depends on the banks. Now the central banks will be taking more roles into those distributions. We will really never know, right? But I think that show that kind of potential. And I want to circle back is also on the barrier to entry, right? Because when the central banks or a country want to issue their own CBDC, I think on the technical element, right, is you need to be a very high aptitude kind of domain, where I think on each jurisdictions they need to start to train their own blockchain developers, which if you take a step and see on this vertical is actually very rare, right, in terms of talents. I think even we don't talk about the CBDC arena, we talk about the Bitcoin core developers or big other blockchain kind of developers, no matter like Matics or other so-called L1, L2 kind of a blockchain. I think the talent is still at a very early stage where I mean we don't talk about blockchain developers, we talk about developer itself. I think now is in a not enough supply kind of stages, right? Then some more need to be so niche into the blockchain domain. Then after that, from the blockchain domain, you have to go into another kind of expert or specialization, which you're talking about CBDC, where you need to ensure there is a high-end kind of cybersecurity measures or safeguard to reduce the technology risk. So I think we are talking about very, very high-end kind of domain here. And it takes a lot of talents to make this happen. So I think, whether the central government's receptive on this is one thing, but the talents, resources to make this happen is also another barrier to entry or the challenge. Yeah, that's how I see that. Yep.
Thank you to you. Now, I note that there's another question, and I think it's related also to one of the questions posted in the Zoom chat. Will there be opportunities to stake or earn interest while holding crypto? So in the early days, cryptocurrency is zero yielding. You just hold it and pray for the price to go up, and well, it did go up. But now, as this asset class has started to mature, it is possible to actually earn interest. And in fact, there's the term yield farming, which is why I show the farm wheel picture earlier. Will that be coming to Malaysia? Is it possible to have this kind of service in Malaysia? Aaron, perhaps you have some thoughts on that.
We would definitely love for it to come to Malaysia. I don't know if the current regulatory frameworks allow for it though. That's the challenge, I think, for us at the moment. But what a lot of people are doing is, doing this DeFi kind of get earning yield staking overseas right now. Yeah, we will, I think, as an industry, probably do what we can to bring this kind of technology locally. But we are all regulated, so we will have to get the regulators on board for this.
So would it be right to say that this is definitely not a technology problem, not a technical problem, but more of getting over the regulatory hurdles?
Yeah, pretty much. It would be.
Yes.
I mean, yes. Short answer is yes.
I think we will have to say yes.
Yeah, they are like, if you think down the path of either Ethereum or some of the other proof of stake projects where you can stake not tied to any particular any particular fiat, then I mean that exists. But if you're talking to come into the regulated space, then yeah, the answer is what we said earlier, right? The regulated space is we don't see it yet.
I missed this question. So if either of you can answer, that would be great. This question is asking, what are the new cryptocurrencies the DEX are proposing to SC to be included in the approved list? If you are able to answer, if you are at liberty to share that, or what they can expect.
Not at liberty.
Same here, yeah.
All right, no problem. To the panel, will there be opportunity for? Okay, this last question is on Zoom. To the panel of established speakers, would there be opportunity for a licensed exchange in Malaysia to convert all forms of cryptocurrency into fiat for fundraising purpose?
I think that one is like for IEO, right? Yeah,
Right?
IEO. I'm thinking of that.
Yeah.
So again, just for clarity, the IEO, at least what we think the IEO will happen is that a company issues a token and will be paid in fiat and I presume in ringgit. I mean, that is my understanding, because some of the ICOs that I've seen overseas, they actually issue tokens but get paid in Bitcoin or Ether. What about in Malaysia? Will it still be a fiat to crypto?
I don't think there's going to be any limitation on the form of fundraising. Even if you look in ECF, there's been ECF deals that raise money using digital assets like Bitcoin. So SC is not prescriptive on how the funds are raised.
Okay. So with that, it's actually 7:30 right now. I'm just going to have a quick scroll through the list of questions just to see whether I missed any. Okay, that's one interesting question here. How feasible for cryptocurrency to be currency of the future? At what point can we burn the paper dollars? I will answer that to say that you can burn it now. It's just a personal choice whether you want to burn it now. But of course, you can always purchase the ones that you burn for the ancestors. Those are much cheaper, so to speak, right? So I think with that, we come to the end of our session today. I would like to express our sincere gratitude and thanks to our panelists who have taken their time to actually share their views. But don't go first. There will be a poll that will be put on screen shortly, so please stay on. And yes, you should be able to see the poll right now. Right? So we do appreciate if you can provide your views and feedback on this session, right? And okay, I was supposed to show this, but I'm going to go straight into this slide. Just like to take this opportunity to also let everyone know about our upcoming event, right? And this will be on the 28th June, where we will actually look at how SRI is going to be integrated into the investment decision-making process, sustainable and responsible investment or investing, or ESG for that matter, right? So details available on our social media platforms. You can register, or you can just take your phone and scan the QR code right now, right? So, okay, yes, we've got the polls results coming in. So again, thank you very much to Chiyu, Aaron, and Joby for sharing your time and also your insights.
Thank you for having us.
Yeah, thanks for the opportunity. Our pleasure.
Thanks for having us, guys. More engagements like this really do help this space along. So yeah, we do appreciate it tremendously.
We will start planning for the next one.
Yeah. If you need us to come speak to your board of directors, just let us know. We are very happy to do so.
Happily.
Okay, so yes, that's the end of the show today. So again, for those of you who are interested in our next program, right? Yes, that's what is being shown on screen. Do take your phone out and register. Just scan the QR code, right? So have a good evening, everyone. Thank you, and stay safe.
All right. Thanks, everybody. Stay safe. Definitely.
Thank you, everyone. Stay safe.
Bye. Stay safe.